David's gone over some of this, so I'm going to go over it pretty quick. But you can see last year in the U.S. equity markets up 23.5%, very good, strong returns. So far this year, we've added another 3%. Again, very decent, strong returns. But as David pointed out, from March 9th lows, the market's up 70%. This is a very strong rebound, so very encouraging. But I would point out, from the market highs on October 9th, 2007, the market's still in the U.S. about 27% below its peak. So as good as that rebound of 70% is, it's not made up what we lost in this past market. In Canada, very much the same thing. The TSX up almost 31% in last year, even better than the U.S. We've added about 2% so far this year. And from the lows of March 9th, not quite as high, but we didn't go down as much. The market's recovered almost 60%. But again, in Canada, we have not recovered back up to those highs we've seen in this market. So again, good market, but we're still, from where we were at the height, we're still underwater. Now turning to the yield curve, you can see 2009 versus 2010. The long end of the curve up 1% in the US, up to about 4.5%. The short rates, well, let's face it, rates last year were almost at zero, so you couldn't go that much lower. They did move down a little bit, down 25 basis points. The thing to point out about the yield curve right now in the US is it's very steep. And that would indicate that interest rates, when you have a steep yield curve, are set to go up. And we think that the first move, obviously, is going to be in the short end of the curve. In Canada, almost exactly the same story. You saw interest rates in the long end up 50 basis points. Again, in the short end, you're almost at zero, so it couldn't go down much more. The yield curve in Canada, again, steepened. Not as much as you saw in the US, because the long rates didn't go up as much, but still a fairly steep yield curve. And again, we would expect rates in Canada, the first move would be up, and that would be in the short end of the curve, and probably before the US, probably around springtime. Now looking at the credit markets, you can see that both in Europe and the US, credit spreads have narrowed during the year, and that's a good thing. It was right across the entire risk spectrum, everything from government securities to high yield bonds. You've seen the credit spreads narrow. And that's an indication that credit spreads, or rather credit markets in the world, have opened up over what we're seeing last year. It's a totally different environment. So overall, when we look at the equity markets, we look at the fixed income markets, the markets are telling us the economy is doing very well. So now let's have a look at the economy. And to do that, a lot of times when people talk about the economy and they talk about different types of recoveries, they talk in terms of letters. And when I think of learning letters, I think back to Sesame Street. So I thought we'd use some of the characters from Sesame Street to help us with that. More specifically, you've got Big Bird there with the V, so the V-shaped recovery. You've got I think that's the Cookie Monster with the dreaded W, or double dip recession. And then finally, you've got Oscar the Grump with that annoying L-shaped recovery. So what do we mean by those recoveries? Well, we can look back in past markets to see these types of market actions. Specifically, in 73 to 75, you had a very sharp contraction, followed by a very sharp recovery. That's the V-shaped recovery that a lot of people are looking at we might be in today. In 80 to 81 to 82, the double dip W-shaped recovery. And then finally, in 90 to 91, you saw a contraction followed by a number of years of very stagnant growth, the L-shaped recovery. Now, when we look at that L shape, you can see that it actually isn't a flat recovery. We did see an improvement, so it's not really L-shaped. I would maintain that is actually more of a square root sign. And if you're going to use a square root, what better character to look at than count upon count? So that's my favorite. So that's what we're going to use for that one. So really, when we look at the economy, it's a question, are we looking at a V-shaped recovery like Big Bird, or is it that L-shaped or square root recovery like the count? In order to do that, we're going to look at US economy, we're going to look at consumer spending, the housing market, and employment.